Spotting an unexpected charge on your bank statement can throw you off, especially in today's world of digital payments and subscriptions. Whether it's a double charge, an unauthorized purchase, or a subscription you thought you canceled, these moments can be frustrating, but you're not powerless. The good news is that you've got rights and a clear process to dispute errors. Let's face it, issues with transactions happen. Whether you're swiping, tapping, or clicking buy now, the more we shop, the more likely we are to run into payment problems. These issues typically pop up in two ways. Either someone made a purchase you didn't authorize, or you paid for something that you've never received. If you spot an incorrect or invalid charge, your first move should be reaching out to the merchant. Banks require you to try sorting things out with the seller first. When those direct conversations aren't getting you anywhere, that's when you bring in your bank. Filing a dispute tells your bank that this merchant did not keep their promise, and you need them to help sort things out. Your bank will reach out to the merchant's bank, and while they investigate, they usually issue you a temporary refund. The investigation can take 45 to 90 days, depending on how the purchase was made. The merchant can fight back with evidence to challenge your claim. If they make a strong case, your bank may take that temporary credit back, leaving you on the hook for the original charge. If your claim holds up and the merchant doesn't dispute it, your bank will move forward with the process as usual. The Electronic Funds Transfer Act and Fair Credit Billing Act establish rules and guidelines for banks to follow when handling a dispute. Under these regulations, you can submit a dispute in the following scenarios. If someone makes purchases with your money without your knowledge, it's time to act. This could be a thief swiping your lost card at a coffee shop, a scammer using your identity for a shopping spree, or even someone hacking into your online banking. Billing errors can slow down your day. Maybe your electric bill gets charged twice, or that gym membership you signed up for at $39 comes through at $89. Common billing errors include duplicate charges, incorrect purchase amounts, payments going to the wrong account, or transactions processed at the wrong time. We've all tried canceling a subscription only to find the charges keep coming. Maybe that free trial quietly turned into a premium plan, or a canceled streaming service keeps charging you. Some companies make canceling a nightmare with hidden processes or inconvenient call times. When an online order shows up damaged, defective, or fake, it's not only a major letdown, but also a solid reason for a dispute. Think of clothes that rip after one wear, electronics that don't work, or knockoffs pretending to be the real deal. For services, it could be an unwatchable online course or a home repair service that actually makes things worse. Sometimes what you ordered just doesn't show up, or it's not what you expected. Maybe your delivered package never arrived, or you ordered car parts and got a car toy instead. Other times, it's hidden fees or a lower quality service than what you paid for. Make sure to collect all the proof available before filing your dispute. Save emails, screenshots, photos, and any records of trying to sort things out with the merchant. Think of disputes as a financial emergency brake and not as an undo button for shopping decisions you're having second thoughts about. Using your bank as a shortcut to get your money back when you're just not feeling the purchase anymore is known as first-party fraud. Banks keep track of account holder activity, and too many invalid disputes can result in them flagging your account or even closing it. Here are examples of what's not dispute-worthy. A clothing item that doesn't look as good as you thought it would. You can't remember if you placed that mysterious $30 charge, so you fight it just in case it's fraud. That subscription box you forgot to cancel, but could have. The takeout order that was kind of cold, but you ate it all anyways. You let your roommate use your card to purchase groceries this week, but they went over budget. Anything you could have returned to the store, but didn't feel like it. The dispute process is there to protect you from real problems, not to be your personal time machine for shopping choices you regret. If you're dissatisfied with your purchase by no fault of the merchant, try contacting them directly. While disputes are there to protect you, using them as your go-to solution when you're just not feeling the purchase isn't the honest move. Merchants and banks caught on to people treating disputes like an undo button, and they've updated their playbook. What used to be the merchant's problem is now everybody's problem, including yours. Going the dispute route usually takes way longer than just getting a regular refund anyways. Knowingly submitting invalid disputes with the aim to simply get a refund is known as friendly fraud or first-party fraud, and costs both banks and merchants serious amounts of money. The consequences of friendly fraud can include the following. Banks might see your legitimate fraud claims as abuse if you've cried wolf too many times. Your banking privileges can get restricted, including spend limit and online access. Your credit score could take a hit if your account gets closed as a result of first-party fraud. The dispute process is your financial safety net for genuine errors and fraud. Before submitting a dispute, keep it legitimate by connecting with the merchant first. Save disputes through your bank for when you really need them. For more resources on fraud and disputes, including regulations and best practices, check out our website at quavo.com.